Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you my European opening market comment for July 27th. The yen really stood out in a fairly stable market overnight. It plummeted on news reports that Prime Minister Abe will announce an enormous 27 trillion yen stimulus package. The currency had gained yesterday on reports that the package would actually be smaller than people thought. Now, as I mentioned yesterday, to turn that around, a larger package means issuing more bonds, which means the Bank of Japan can buy more bonds, which means more monetary stimulus and a weaker yen. Besides, the Tokyo stock market was up this morning around 1.2% to 1.9%, depending on which index you use. And dollar-yen usually follows the stock market. The Australian dollar initially gained on somewhat higher than expected inflation for the second quarter, but then fell back in an atmosphere of general dollar strength. Now, oil prices are much lower this morning after the American Petroleum Institute's data showed a large rise in inventories in Cushing, Oklahoma, the delivery point for the benchmark WTI, West Texas Intermediate crude. Now, national inventories fell, but not by very much, which may also be a reason why prices fell. For today, there's a lot on the schedule. The day starts out here in Europe with Germany's GfK Consumer Confidence Index and the French Consumer Confidence Index from the INSEE National Statistics Office. Both of these are modestly market affecting. The market's looking for only a small fall in both of them, despite the Brexit vote and the terror attack in Nice on 14th of July. A fall limited to the degree that the market expects might be taken as good given the circumstances and prove positive for the euro. The preliminary UK GDP figure for the second quarter is expected to show an acceleration in growth. Now, given the collapse in the PMIs and other surveys after the Brexit referendum, will anyone really care about the second quarter? Moreover, much of the strength in the figure apparently came from the relatively strong April data. Activity has slowed down afterwards. It's the post-Brexit bounce that people will be waiting for. Accordingly, I don't think this figure will make that much difference unless it diverges in a major way from expectations. Now, for an update on the U.S. indicators coming out today, including the all-important FOMC meeting, please watch my North American opening market comment later today. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.